Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed towards the latter part of the show. But before we kickstart, let's see what the global handover looks like. Wall Street, of course, was shut on Thursday for Thanksgiving holiday, but Asian markets are mixed in early trade as the street digests a raft of economic data, including Tokyo's inflation print and Singapore's GDP. The SGX Nifty, meanwhile, indicates a mildly lower start for our own market. Meanwhile, European markets yesterday extended gains on Fed's slowdown hopes. Stock 600 gained 0.5%. All other key bourses in the Eurozone also ended pretty much in the green. In our What's Trending segment, today we do a deep dive into internet companies PB Fintech and Paytm. On the technicals front, we put the spotlight on Lupin, PNB and Fino Payments Bank. Okay, let's start with the hot talking point of the day, new age tech companies. Neha Dave joins us and she has been tracking these two finance companies which are digitally savvy, from the digital realm, PB Fintech and Paytm, both very, very closely. Morning Neha and thanks for joining in. I want to start with PB Fintech. What happened yesterday? What we understand is there was a bulk deal which took place during market hours. The stock spiked more than 10%. This is the stock which has tanked more than 50% since listing late last year. Talk to us about what's happening right now in the company, in the stock price.
Thanks, Karunya, for having me on the show. So yes, PB Fintech stock closed 8% up yesterday, and this was after a huge selling pressure it witnessed in the last few days as the pre-IPO investors had rushed to sell their stake in the company. So when interesting development that happened the day before yesterday was IRDA, the insurance regulator, released a draft proposal or regulations on expense of management and commissions. Now, this draft regulation was very positive for PB Fintech because in the primary change in that was the regulator is talking about removing all kind of caps or not having cap on commissions which is paid by insurance companies, both life as well as non-life insurance companies to intermediaries and distributors. Now, this significantly reduces the regulatory risk for PB Fintech relating to commission rates, and hence it was positive for PB Fintech, and we saw the response in terms of the stock upside.
Okay, all right. And obviously, the second big name we want to talk about is Paytm because there is a lot of interest there. A lot of retail investors are now suffering. There have been big names that have exited post the expiry of the lock-in period in the IPO. But let's understand from a fundamental standpoint what's happening in the Paytm, because the stock slump that it has seen has been the largest and the world's worst for a large IPO in a decade. So what explains the 75% being wiped out in the last 1 year odd?
Yes. Investors or shareholders in Paytm has lost more than 1 lakh crore in last 1 year, and there has been various reasons for it. There have been fundamental reasons which include there is some ambiguity on the business model wherein Paytm is trying to grow its non-payments business. There is a lot of uncertainty, future uncertainty, because there is heightened competition in the space. Also because there are certain execution risks as it tries to grow its lending book. And the most important is there is a lot of regulatory risk the company is facing. Investors should recall that RBI has barred Paytm's payment bank from onboarding new customers, and the company is actively engaging with the regulator. Till now, there has been no development on this side. So there are many reasons, and one of the reason that has been talked about recently is that the potential competition that could emerge from Jio Financial Services. Jio plans to enter into merchant and consumer lending, which is the mainstay for Paytm. and this could mean that there would be more competition for the company. Now, these are the fundamental factors, but most of these fundamental factors, one would like to say, are in the price because the valuation has corrected significantly. At the current market price, the valuation would be around less than 3 times the revenue multiple. Now, that is very attractive for a company which is one of the very large on the payment business. But one also needs to understand that Paytm is losing market share in the payments business, which is also a very thin margin business, and they are still developing the lending business. So apart from these fundamental factors, one factor, technical factor, which is weighing on the stock price is obviously what you mentioned is the lock-in. Pre-IPO investors' shares are opened up from lock-in, and the lock-in has expired. So this has led to some huge selling. For instance, SoftBank sold around 5% stake in the company in the last 1 week's time, and this is what has been reported. And one interesting thing that investors also need to understand is, despite a sharp fall, investor needs to be very cautious. We have seen a similar pattern in Zomato, where the opening up of lock-in shares led to the crash in the prices, but the stock price again recovered or bounced back sharply. But in case of Paytm, investors should note that around 86% of Paytm's outstanding shares were under lock-in between some 5 to 6 investors. So there is a huge supply risk which is still there, and that could keep the price upside move in the stock very limited.
Okay, all right. What about the global tech crowd that's also taking place in big markets? Is that also a factor that's weighing in on tech companies, especially the new age tech companies back home in India?
Yes, sure, definitely. So okay. The rising interest rate scenario and reduced liquidity has led to drying up of funding in the private markets, and public markets are also seeing the similar trend. The new age companies which are loss-making growth stocks have suffered a lot in terms of price correction.
Okay. What about margin of safety? Do these new age companies offer any margin of safety? Because profitability still seems like a big concern, especially for names like Paytm, the one you just talked to us about in detail. So at this juncture, would you say either of these stocks should be bought into for retail investors?
So between Paytm and PB Fintech offers a little more better margin of safety. The primary reason there is the regulatory risk, which I already mentioned, has reduced significantly after the regulator releasing the draft proposals a day before yesterday. So that is one positive thing. Apart from another important thing about PB Fintech is that it is the largest online marketplace for selling of insurance. And it is a clear market leader. That business is doing well. Their operating metrics have improved, and the company is very, very confident and has guided for getting profitable in FY24. So, PB Fintech definitely looks better in terms of, how it is placed vis-a-vis Paytm. One risk, though, investors should always watch out is Bima Sugam, which is planned to be launched soon, and that could lead to some kind of a disruption even for PB Fintech. And hence, this stocks, there could be downside, but PB Fintech is relatively better placed than Paytm. And Paytm, though it is market leader in payments business, it is losing market share there. Lending, it is still trying to grow that business. It has done well. There has been good traction in the current quarter, but it is competing against the likes of SBI, Bajaj Finance, now Jio Financial Services. So the competition is very, very high. So PB Fintech obviously looks more interesting and as compared to Paytm at the current market price.
Okay, Neha, thanks much for taking us through the details of both of these tech companies which are from the financial space. PB Fintech, Paytm, looks like there's going to be more pain for the latter, and PB Fintech, going by the current scheme of things, looks definitely better placed, has better margin of safety compared to a Paytm. So in case you're mulling over investing in either of them. Okay, let's talk technicals of the market. We have our guest for the day joining us, Nilesh Jain from Centrum Broking. Morning, Nilesh. Talk to us about the fresh series. What lies ahead?
Very good morning, Karunya. See, yesterday was a expiry day for the November series, and yesterday we have seen a huge amount of short covering. And looking at the overall data, rollover were seen higher in terms of 3 months of average. In fact, even if we compare with the 6 months of average, good amount of rollover was seen, more than 80% in the bank Nifty. So that is quite surprising. And looking at the Nifty rollover as well, we believe that in the December series, this particular momentum that we have witnessed recently is likely to continue. And as far as levels are concerned, 18,600, that's the previous all-time high levels, which is likely to be tested. And going forward, we are heading towards 18,800 and 19,000. I won't be surprised if Nifty tests 19,000 levels in the December series itself. And ahead of the budget next year, we can expect a pre-budget rally. Looking at the overall structure of the bank Nifty, which has outperformed compared to the Nifty index in the November series. In fact, in the last couple of months, we have seen outperformance in the banking space. So that outperformance is likely to continue. 43,500 to 44,000, these are the two levels that we are expecting, the bank Nifty spot levels. And any decline can be a good opportunity to make a fresh entry. We are very much, highly convinced with the private sector banks have set up counters like ICICI Bank, Axis Bank, and HDFC Bank. So these are the few preferred bets from our side. From PSU banking space, we are positive on SBI, Canara Bank, and BOB. So overall, looking at the structure derivative data, the December series is likely to be on a positive side.
Okay, all right. Let's flag off some of the stocks also that could be in the limelight today on back of news flow. Now, the first one is Lupin. Not so good news coming in for this one. US FDA has issued a Form 483 with 8 observations for the Mandideep facility. This was for an inspection that was done this year itself, November 14 to 23. So just recently, in fact, just 2 days ago, the inspection was concluded. 8 observations is what they've given to Lupin, this particular facility. Talk to us about the technicals of Lupin. Is it looking interesting or attractive right now, or should one stay away?
It is better to stay away, Karunya. If you look at the overall Nifty Pharma Index, only 2 stocks have outperformed, that is Sun Pharma and Cipla. And we are still very much bullish on Sun Pharma. If somebody wants to bet on a Nifty Pharma Index, pharma stock, I would advise to go along with Sun Pharma for the upside target of 1100 and 1150 as a. Whereas as far as Lupin is concerned, this particular counter is merely witnessing a pullback, and the major structure is still on a weaker side. And any pullback from here could be a good opportunity to exit the long position. And the structure is not looking that positive. It is better to stay away if somebody is looking to make a fresh entry. And those who are already holding the long position can keep a stop loss below 700. It is better to shift to the counters like Sun Pharma and Cipla.
Okay, so Sun Pharma, Cipla look better placed vis-a-vis a Lupin. Let's change gears and talk about some names from the BFSI space. Fino Payments Bank. Now, this has been in the news for the last couple of days. Capri Global Holdings has been buying shares. They bought additional 6.1 lakh shares in the company for 258.5 rupees a piece. Talk to us about Fino Payments. It's a small cap, but it has been gaining a fair amount of traction and interest from the street. So what is the likely way ahead for this?
Well, in the past 2 trading sessions, we have seen a good spurt in this particular counter, and the major structure is not that convincing here as well. We are witnessing a sort of a gradual decline. Although this pullback may continue and may extend towards 280 to 300, we are not recommending any sort of long position in this particular counter. We don't have any coverage as well. But technically, any breakout above 300 will change the texture of this particular counter, and the upside will then open for 350 to 380. As of now, it is better to book profit if at all we see the levels of 280 to 300.
Okay. Want to talk about another name from the banking space, and this is PNB. Now, they have received an approval from DIPAM and the Ministry of Finance to divest stake in UTI AMC. Currently, if you look at it, they hold about 15.2% stake in UTI AMC, and the whole point or the whole purpose of this divestment is to realize gain on their investment. Let's talk about PNB, because there has been a phenomenal run-up in PSU banking stocks of late. There's a lot of interest there. PNB definitely looks like one of the most promising names. Do you agree with that view? Because we've been hearing that from several other experts we've been chatting with.
Well, we can say it is underdog from PSU banking space, and if you look at last 2 years, this counter hasn't done quite well, and a lot of consolidation we have seen in the February 2020, the prices were near about 48, and currently it is trading near about those levels. So we haven't seen any meaningful rise in this particular counter in last 2.5 years. Now, if you compare with SBI, Bank of Baroda, and Canara Bank, so I would still advise to go long in those particular counters. Whereas this particular counter is not that bad. If somebody is already holding the long position, can continue to remain on the long side, and on the high side, 55 to 60 could be the levels that we can expect in 1.5 months. So structure wise looks positive, but positional perspective, I would still advise to go along with counters like SBI and Bank of Baroda.
Okay, fair point. Let's also bring in some of the queries that we've lined up for you. A lot of questions coming in on the banking space. There's Bandhan Bank, Federal Bank, any of these private sector lenders from the mid and small cap space that you like?
Yes, definitely. We are not liking Bandhan Bank that much because the numbers were not that good, and for back to back, we have seen disappointment in the numbers, and we are also witnessing a technical breakdown. So it is better to avoid taking any contraband in Bandhan Bank for the time being. Federal Bank looks extremely positive. Any decline could be a good opportunity to make a fresh entry for the upside levels of 140 to 145. It is better to wait for some more decline towards 128 to 125. That could be the good buying range with the stop loss below 120, and the upside target could be 150 to 155. Apart from that, we are also liking KTK Bank. That is another outperformer that we have seen recently, and the upside is very much open for 155 to 160 in KTK Bank as well. Decline should be used as a buying opportunity. We have witnessed a good flag and pole pattern breakout in this particular counter. So wait for some decline for sort of a profit booking, then make a fresh entry. Those who are already holding the long position can continue to remain long.
Okay, well, more questions coming in for Sun Pharma, but I think you've already addressed that. Moving on to Sanjay Chaudhary's comment, he wants your view on Mazgaon Dock shipbuilders. How is that looking?
Looking extremely positive. The only concern is that we have already seen a sharp run up back to back. I would say fifth straight monthly series we have seen an outperformance. From 230, it has gone up to 880. So it is better to avoid any aggressive bet at high level. The risk and reward is definitely not favorable. If somebody is already holding the long position, keep a trail stop loss below 800 and stay put for the upside levels of 950 to 1000 as a positional target.
Okay. The next stock is Tata Consumer Products. Rohit Ghai is sending us in his comments and he wants your view there. Of course, Tata Consumer was in the limelight for all day yesterday on back of that Bisleri acquisition news. Talk to us about Tata Consumer's technicals and is it looking good for the medium to long haul?
Yes, definitely. It is looking positive. And from a short-term to medium-term perspective, I believe the upside target could be 820 to 840. And from position standpoint, this can be a good outperformer from FMCG space, and upside target could be 860. So one can definitely make a fresh entry on declines and stay put with the long position with a stop loss below 765 for the upside target of 840 and 860.
Okay, all right. What about sugar sector stocks? Any names that stand out for you? Naveen is asking us if you have any picks there.
Yes, so definitely we are also bullish on sugar space, specifically two counters that we are liking. One is Renuka Sugar, where we have seen a lot of consolidation in past couple of months, and now it is again looking attractive because it has reached the levels of near about support zone. So from current level, we can expect upside move to continue towards 60 to 65 in the near term. Keep a stop loss below 54, and one can definitely create a long position current level. Apart from that, Balrampur Chini, that is another counter where we have seen a fresh breakout from a falling channel. So that counter also looks positive for 420 to 440 sort of levels on the higher side in the near term. Keep a stop loss below 345.
Okay, all right. Very quickly then, your view on ONGC. Om Prakash is asking the question.
ONGC looks positive, and finally we have seen a run up in this OMC space and also refinery space. So this particular counter is also looking positive for the upside target of 150 in a very near term, and positionally it has also has a good dividend yield as well. So 160 to 165 could be the positional target. Keep a stop loss below 132.
Okay, next query coming in from Rajesh. He wants your advice on Tanla platform, another favorite from the broader markets as far as the trading community goes. What's your view here?
Not looking that promising. Currently, it is undergoing through some sort of consolidation. The volume activity is also not picking up. So, look sideways as of now. No clear view. And if somebody wants to, make a fresh entry, then keep a stop loss below 670. And on the higher side, we need a breakout above 820 for further upside move to continue towards 900, 950. As of now, it is in the no trading zone.
Okay. The final query I want to address, it's an interesting one. Vignesh is asking, what's your view on Mahindra Holidays and Indian hotels for the next quarter, as there is a massive surge in hotel bookings, resort bookings, etc. And this is typically a very strong quarter for these hospitality and travel companies. So tell us, what is your view here?
Well, if you look at the Indian hotel, this particular counter, we have already seen a good amount of run-up, and currently it is undergoing through some sort of consolidation. So at current level, it is not advisable. The prices have already discounted all those stuff, and I would advise to wait for some decline to make a fresh entry in this particular counter, and also in other counters. Indian hotel, as far as levels are concerned, keep a stop loss below 300, and positional perspective, it may test the levels of 340 to 360 in the near term.
Okay. You know, you've talked about PSU banks, you've talked to us about smaller private sector lenders, but I know for a fact that your favorites are the big leading banking names. So talk to our viewers about what is it that you have in store.
Right, Karunya, you have rightly mentioned, we are very much bullish on the large cap private sector banks as well. So ICICI Bank, this particular counter we are liking very much. Reason being, it is one of the outperformer in the private sector banking space, and also it has reached all-time high levels once again. So it is leading the Bank Nifty pack, and positionally we believe that it can be an outperformer, and the short-term target comes around 970 to 1000. And positionally, if somebody wants to take a view from next 1 year perspective, I won't be surprised if this counter moves towards 1150 to 1200. 922 should be the stop loss from trading perspective. The another counter that I am liking is another heavyweight, that is HDFC Limited, one of the underperformer in the Nifty basket. And currently it has resumed its uptrend and making a higher top and higher bottom formation. One can go long for the upside target of 2800, keep a stop loss below 2640.
Okay, well, HDFC Limited and ICICI Bank, then the top picks. All right, Nilesh, thank you so much for joining in and addressing so many queries and questions that our viewers had, and of course sharing your view on the market at large. With that, it's a wrap on Morning Trade. Thank you for tuning in.